Welcome back to another Crypto Weekly Roundup. I'm Jemmy and this video is brought to you by Pundi AI. Every week we cut through the noise and give you the fastest, most direct update on what's happening in crypto. No fluff, just straight to the point. Just a quick mention before the video starts. Pundi AI's dashboard is now live. You can easily find all the info and datasets right on the website, and soon it will be available to download for AI startup to train on. The layout is super clean and easy to navigate. I'll drop the link in the description box below. Alright, with that out of the way, let's jump into the first story of the week. Circle, the company behind USDC stablecoin, is trying to go public again, this time aiming for a $5 billion IPO on the New York Stock Exchange. If successful, it will be the first major crypto listing since Coinbase and a huge moment for the stablecoin space. Circle runs a focused business, no legacy baggage, just stablecoins. It processed 27 trillion in on-chain volume last year, more than Visa or MasterCard, and earned 1.6 billion in revenue, mostly from interest on USDC reserves. Big names like BlackRock, Coinbase, and Binance are already partners. But it's not all smooth sailing. Despite strong revenue, profits fell 42% in 2024. That's because Circle is spending big to grow. Coinbase alone got over 900 million for USDC distribution. And even with that speed, revenue only grew 16% year over year. Right now, Circle trades at about 33 times earnings, plus 99% of its revenue comes from interest on US Treasuries. If the Fed cuts rates, Circle's income could take a serious hit. So, is it worth 5 billion? Well, that's a big question. On one hand, Circle could be a leader in the future of digital dollars. On the other is high cost, low margin business facing rate risk and rising competition. If regulation opens the door, big banks and fintechs might flood in. Whether this IPO is a big win or a warning sign, we will find out soon. Next piece of news, we also have Donald Trump keeps changing his mind on tariffs, and it's been hard for people to keep up with. Like one day he's putting taxes on countries all over the world, holding up phone board that looks like a meme, and the next day he's pausing all tariffs except for China. These sudden changes are confusing for businesses, investors, and the market in general, since no one really knows what's going to happen next. Recently, Trump decided to remove tariffs on some tech products like smartphones, chips, and computers. That's good news for big tech companies, and because crypto prices often move in the same direction as tech stocks, Bitcoin also went up, breaking past $85,000. Investors saw this as a positive sign and started putting more money into risky assets like crypto. But experts say these decisions might just be for show. Some believe Trump is using tariffs as a way to get a better deal with China, not because he has a long-term plan. Even if markets go up for now, there's still a lot of uncertainty. Bond yields are rising and trust in the US dollar or US government and economy is shaky, so the effects on crypto might not last. Next up, we also have a controversial proposal on PancakeSwap called Cake Tokenomics 3.0. Seeks to remove the current vote escrow system or VCAKE and gauges voting, replacing them with a simpler emissions model targeting a 4% annual deflation rate. This would eliminate the need for long token lock-up to participate in governance and rewards. But just before the vote, Binance locked up 25 million Cake tokens from one of his wallets and instantly becoming the biggest voter. Then it used that power to kill off a DAO called CakePie just because it didn't like it. And right after the vote, Binance unlocked the tokens and exited. No long-term commitment, no cost, no accountability. This wasn't real governance. This was a systematic purge dressed up as a vote. What's scary here is the signal it sends. If you're not part of the centralized power structure, You're not one of us and you can be removed without warning, without process. It's not just about disagreeing with the proposal, it's about changing the meaning of governance itself. The whole idea of decentralized governance is built on long-term alignment, shared decision-making, and cooperative incentives. It's not supposed to let a powerful player sweep in, take control, and leave, destroying the trust and effort of actual community members. That's not governance, that's domination. When governance only benefits the ones holding all the power, when it's just ruled by decree, then what's the point of calling it Web3? Of course, I'm not denying Binance's role in growing the crypto space. In fact, because of its massive influence, Binance should be held to a higher standard. It should respect the limits of governance and stay open to community checks and balances. So here's the real question. Is Binance acting as a participant in governance or as the one controlling it? Moving on, we also have some comparison between gold and Bitcoin because gold is having a moment right now. Tokenized gold like Tether's XAUT is one of the top performing digital assets this week, up 3% in 24 hours. Even though tensions around trade wars are cooling off, investors, especially in Asia, are still piling into gold as the safe haven asset. They worry about the unpredictable US policies and rising debt levels. XAUT is now trading at 3,200, outperforming most of the crypto market, which is mostly flat. Boomers are flexing right now. Since Trump's return, gold is up about 20%, while Bitcoin is actually down 20%. On the surface, gold looks like the winner, and in the past year, gold has gained around 36%, while Bitcoin has only gone up 17%. So it's easy to see why some might think gold is the better bet short term, but that's not the full picture. Zoom out in the past 5 years, gold is up around 91%. Solid, but Bitcoin up about 1,000%. Now let's also look at the big one. Over the past 15 years, gold has risen 185%, but Bitcoin has skyrocketed 2.7 billion%. And yes, that's billion with a B. So while gold is having a short-term rally, Bitcoin's long-term performance is still unmatched. Next up, we also have the Shopify CEO Tobi Lütke just made it really clear. No more hiring unless you can prove a human is absolutely necessary. In a memo to staff, he said employees must show that AI can't do the job before asking for more headcounts or resources. In a memo to staff, he said employees must show that AI can't do the job before asking for more headcounts or resources. The company expects everyone to be using AI tools in their daily work and is even factoring AI use into performance reviews. Lütke called AI a multiplier of productivity, saying those who embrace it have been able to do 100x more than before. Shopify itself is heavily investing in AI with tools like its chatbot Sidekick and automation suite Shopify Magic. So the message here is crystal clear. If you are not using AI to its full potential, you're falling behind. This shift comes as tech companies across the board are cutting costs and doubling down on AI. Shopify cut 14% of staff in 2022 and another 20% in 2023. They have trimmed headcount again slightly in 2024 down to 8,100 employees. So even as the company keeps growing, it's becoming clear the future workforce is part human, part AI, and maybe mostly AI. So is he being a shameful CEO, or is he just stating and implementing the obvious truth that AI workforce will be entering? What do you guys think? Let me know your thoughts down below. Google just dropped Firebase Studio, a new AI app builder that lets you create full apps just by describing your idea with words or images. It's cloud-based, beginner-friendly, and supports popular frameworks like React, Vue, Flutter, and more. You don't need to write much code. The AI does all the heavy lifting. This is Google's big move into the vibe coding trend. Firebase Studio is clearly taking aim at Cursor AI, a $10 billion tool that became popular for letting people build apps without needing deep coding knowledge. While Cursor had a head start, Firebase Studio could take over fast thanks to Google's ecosystem and support for more features and languages right out of the gate. Since it's all in the cloud, you can build, test, tweak your app in one place. No need for extra tools like Visual Studio. You need a Gemini API key to use it, but if you're into app building with minimal effort, this is a strong alternative to Casa. Alright, so that's a wrap. Thanks for watching, and I'll see you guys in the next one.